Hey guys, I got cut off there, but checking out DRWI, there was that huge volume spike there, and at this point, being that there wasn't really any trading action all day, I kind of looked at this as basically the opening price of this stock, and kind of looked at it as an F1 breakout pattern and traded it the exact same way. So looking at this stock here, we had that first basically, huge spike in volume plus price action, which you could kind of look at that as, the open of an F1 pattern. When this market opens, you see a nice little spike in price action plus volume. Then we had an F pattern start forming up here. It came down and retested the 13 EMA on the 1-minute chart as always. And from that point, I went long here, 10,000 shares at 122. And then the F pattern breakout here is at 123. So I traded this exactly how I would if this was an F1 at the opening and bell. From here, we ripped all the way up to 134 before finally collapsing the 1-minute intraday 13 EMA at about 129 and 130. But I was very quick to take profits on this stock. I started taking profits here at about 130, 129. Let's see what my sells here were. Bring down my trading account here. See, I bought in at DRWI. I started buying in here at 122 and 120. Got a few hundred shares filled at 120. But then, the most I bought, 10,000 shares I ordered or bought in here at 122, which was my main buy alert. But I went along, I think it was about 11,000 and a few hundred shares in total. And at that point, I started taking profits here on the way up. I sold 5,500 at 129, then started selling about 3,000 or a little over 3,000 at 132. And at that point, I had about 3,300 shares ZF as a swing, just in case this thing, continued to rip it up. But at that point, the DRWI broke down the 13 EMA here on the 1-minute chart and came all the way back down. My buy price is at 122, so I didn't want to see this go into a losing position. As always, try to never let your stocks go into a losing position, especially after you have a nice profit. But stocks are volatile as hell. So it's easy to get, screwed around with on these trades. And that's also why it's important, always to be taking partial gains, because you don't know what a stock's going to do. And at that point, I sold my last little chunk of shares at 123, and this thing came all the way back down to 115. And that would have put me at, a huge losing position if I would have held my entire position and would have never took any profits. And that's what's going to be great about this hedge fund opportunity I have for you guys. If you're stuck under the PDT rule, there's not going to be any limits on your day trades at this hedge fund that I'm offering. So you can just be taking partial gains just like I did. I made $750 here in about 15 minutes or less than that on DRWI, just trading from about 122 all the way up to my highest sales were at 132 minutes later. So that was just a great example of trading in and out of a quick scalp of an F pattern here on DRWI. Another one I want to talk about is GALE. This is one that I called out here live on Fous TV this morning. In front of everyone, it definitely makes it, a little bit more nervous. There's about 100 people watching live this morning on Fous TV. When everybody's watching you, and wondering, what's he gonna do next? It's definitely puts the pressure on you to, try to trade, the best of your abilities. I dare you to give it a shot to broadcast live and make commentary as you're trading. And see how well you do. It definitely, I'm pretty used to it now. I've been doing it for years, but it definitely, puts you on edge a little bit. But it makes you accountable and makes you not screw around as well. And so, I don't make really stupid decisions because people are watching me, and I try to trade as disciplined as possible. But looking here on GALE this morning, it's the same exact thing. Here's the opening price here. As always with F patterns and F1s, it typically starts out with a nice big spike in volume plus a spike in price action. So that's what we got here on GALE, GALE. Looking on the daily chart here, this thing has been trading in this kind of little flag pattern here at about $3 per share. So it's kind of been, at an indecision level right around here in this $3 range. And so I was hoping to see this kind of break out of this flag that's kind of been forming up here over the past week. or so. So that daily chart plus this potential breakout on the intraday chart was what I was kind of hoping for. That's kind of the strategy of the Fous 4 and Fous 4 Part 2 DVDs, is implementing the intraday patterns into what looking for a good setup on the daily chart, but using the intraday chart over here to kind of gauge your entry. And that's what I do. I look at the intraday chart here on Gale on this F1. I went long at 311.5 for several thousand shares. I think it was 5,000 shares at 312, or it was about 311.5. I think was my average fill. Once that breaks out over that flag pattern here, or F1 is what I like to call it, basically, you kind of ride the 13 EMA on whatever time frame you're looking at. For me, I typically use the 1 minute. You can use 2 minute, 5 minute, and I'll show you the difference here on Gale of how, if I would have used the 2 minute, I would have been able to make a little bit more money. The shorter time frame on intraday time frame, intervals you're using, the quicker the signals are going to be. So here on Gale, we got that nice spike on the open. After that triggered at 312, once that broke this neckline here, I sold half at 320, just locking in some gains, and then I was going to let the rest ride the 13 EMA on the 1 minute chart. Unfortunately, got a little spike higher and then started breaking down right here. So I made that decision, said, okay, I got a nice little profit here. I'm just going to sell out of this trade and lock in my gains. Unfortunately, this ripped right afterwards and just had a short-term breakout. No indicator's perfect. The 13 EMA is not a perfect indicator. Nothing's perfect. It's just meant to be used as a guide. And as far as I've learned, and after trading for almost 10 years, it definitely indicates a solid trend area on small cap stocks, on all interval levels. But I'll show you the 2 minute chart here and how that could have benefited me if I would have held and rode the 2 minute instead of the 1 minute. So you can see it barely broke down the 13 EMA on the 1 minute chart, and I stopped out there locking in my gains. Then continued all the way up to the 340s, and then finally started breaking down, seriously on the 13 EMA and the 330s before not really doing much the rest of the day. So. This is a good example of why, I typically only trade the first 2 hours. If we look at this first F1 breakout pattern here on Gale, there's this awesome move to take advantage of. The rest of the day, nothing happened whatsoever. You could have, tried to trade different patterns on this and would have just gotten chopped around all day, making stupid trades for stupid losses. That's why I focus on the first 2 hours, because these patterns happen very, very quickly, and you can take full advantage of them if you get in at the right prices and execute the strategy well. The rest of the day, as you can see, it didn't really do shit. So I always typically focus on trading the opens, and that's about it. I do trade midday and towards the end of the day as well, but I focus on the opens. But here, if we look at the 2 minute chart here on the intraday scale, this basically rode perfectly the 13 EMA. All the way up until about 332 and spiked up near 340. So it depends on what interval you want to use. I typically use the 1 minute most often, strictly because you're going to find the F1 pattern breakouts the quickest with a 1 minute chart. But once it breaks out, the stock might break down below the 13 EMA very quickly because it's such a short-term signal, and you might get stopped out earlier, just like I did on Gale. Or sometimes you might get stopped out early, and that's a good thing because the stock all of a sudden reverses very quickly, just like DRWI did. I'm very glad I was following this very closely, because this thing reversed and came all the way back down to $1.15. So I'm glad that I was following this 13 EMA on the shorter term scale, because the stock didn't have much in it. It just had a very quick spike before selling off. So it's a double-edged sword. You don't know which ones, or which indicator, or which interval is going to be the best one for any trade. You just don't know. The best thing you can do is just identify the patterns, know the strategy on how to trade and follow the patterns, and execute the strategy as best you can. That's all you can do. As long as you can identify the patterns and try to come out with a profit and minimize your losses by being disciplined enough to take the loss, or take the smallest losses possible. If it doesn't work out, then you're doing it right. What else are we looking at here? ROX. We'll talk about ROX here for a minute. This was a crazy trade where I was up $8,000 on this position here just a few days ago. once we hit this, I'd been talking about this stock for a while. I think starting about right in this area. On this day here, I was long pretty heavily, and at this point, this was looking like we were breaking out of a gold pattern. A gold pattern typically can run towards $2 per share. Unfortunately, they issued dilution right after hours, or it might have been the following morning after this big huge spike. So I was up 8 grand on this stock at this point, and I was thinking, hey, you know what, we're gonna freaking kill it on this stock. We could definitely potentially run towards 2, but as always with Fous 4 patterns, it's got to hold the 13 EMA. And unfortunately, right after that, once that news came out, this stock sold off almost all of the previous day's gains. I sold half my shares at 105, locking in a little over $3,000 in profit. I think it was. I'm not going to be sure until tomorrow when I upload the trade what my total gain was. But I gave back a shitload of profits here. Once this started breaking down, I was still long about 30,000 shares. As I'd added near $1, hoping to see a bounce here off the support level. There's, decent support in this mid-90s range where the actual breakout trigger was. But if we look at the intraday chart, once that broke down below the 90s here, let's go back to a 2-minute chart. It was kind of trading flat all day long, and it was right about break even. And once this started breaking down, that green to red here is basically green on the day, and then all of a sudden it just went red. And that was at about 96 cents right here. So I tried to get rid of everything at 94.5 because my average fill price was about 94. So I didn't want to see this go into a losing trade. Unfortunately, only about 19,000 shares of my 29,000 shares went through. I sold that 19,000 shares for about $88 gain after giving back, thousands of dollars of profit because it came back so quickly. And from there, this dropped all the way to 82 cents. And, I still had 10,000 shares. I actually added 5,000 at 86. I was hoping to see this, just be a panic sell-off intraday and we'd rebound to the upside. Unfortunately, that was not the case. I was trying to save myself from the position after getting caught in that sell-off. I didn't want to be part of the sell-off, but I tried to sell everything at 94.5. Unfortunately, being that I had a large position and it is a low float stock with low volume, it sold off on fairly low volume and I wasn't able to exit out of my position. So, I got caught in the trade, and that definitely, happens from time to time if you're trading penny stocks like this. So at that point, I tried to get out of this position, and it just did not get any rebound and continued to sell off. Today, it kind of rebounded a little bit, but, came back down to 81 cents on near the close. So, this trade's pretty much screwed at this point. Who knows what's going to happen now, but as soon as that broke down 95 cents, here, that was basically, a big sign that this stock was going to work out. And then definitely once it broke down the 13 EMA at about 90 cents. So, I tried to get out for break even or a very small profit. Unfortunately, I was not able to get rid of all my shares, and I eventually sold this second position here for a loss of about $1,900. So, what was once an $8,000 profit here at 810, or at 110 when the stock was up here, I sold half at 105, locked in about 3,000, and then lost 2,000 in the second position because I got caught in this huge sell-off here from about $1 down to 20 or 80 cents. It was a 20% drop, and basically in a situation where I got stuck in it and I couldn't really sell my shares even if I wanted to. It just happened so quick. I tried to recover from it, and it actually, made me lose a little bit more money by trying to add on that dip, because it actually did not rebound. So, that's trading. That was definitely a crappy trade. Unfortunately, that news came out and kind of ruined all the momentum, and it didn't get that support bounce ever and actually broke down the flag. So, nothing I can really do about that on ROX. But, VPCO, this was another one that I got long at 104. Sold half this morning at 120, then sold the second half at, I believe it was like 111 or 110. But I locked in... what I lock in here? I locked in close to $1,200 gain on VPCO, but crazy day again today. The same exact thing with these penny stocks. Went from a 124 all the way down to 126 or 126 here in a very short amount of time, and it was difficult to get out of it because it sells off on low volume. So that was definitely an unfortunate trade. Sometimes these penny stocks just absolutely rip it up and don't look back. But once those panic sells come in, it's definitely hard because you get caught in those positions. And this thing, it dropped 8% when I was up, nicely yesterday at 124 after this ripped 20% yesterday. But, I sold partial gains at 120 to ensure that I had some gains. I sold 5,000 shares, and then another 5,000 about 111 or 110, made $1,200. Same thing on DECN, DECN.